Hope everybody's week and November are both off to a great start. It is Monday. I'm going to bring you a Mondays with Mike today. We just passed the 9-year anniversary of Sandy last week, or maybe it was the week before. And that's not why I chose this topic, but just wanted to point it out. And if you haven't guessed already, we're going to talk about flood insurance today. So, not everybody's favorite topic, not my favorite topic, but FEMA has announced that they're changing the guidelines and they're going to be changing a lot of the premiums for flood insurance. So, my South Shore, Long Island people, this is probably for you, but there's certainly other parts, Queens, New York City, North Shore, where this may impact you. If you own a home and you have flood insurance, you probably know it already. If you're looking for a home on Long Island or in New York City or even Westchester, this is also something to consider. Why does it impact you? Well, A, you want to make sure that you're covered if you need to be, but B, this is built into your escrow payment. So if you own a house with a mortgage on it, if you're flood zone X, which is the least dangerous of the flood zones, you may not be required by your lender, but certainly zones AE or VE, where the risk is higher, at least in the eyes of FEMA and your lender, you're going to have to escrow for that. So it's going to affect your monthly payment, and it's not like principal pay down where you're almost like making an investment in your home with every mortgage payment. This is just to protect you in the off chance that there's flood damage, and it's forced upon you a lot of times if your lender requires it. So it's very relevant, not just for people who are concerned about the area becoming more or less dangerous. I don't think that has anything to do with FEMA changing its guidelines. It's relevant because it's going to impact your payment, especially if rates start to go up. The interest rate goes up, flood insurance premium goes up, and all of a sudden we're going to start to see housing prices be challenged, and buyers are going to have a harder time affording the houses that they may have been able to afford before these changes. By the way, why are they doing this? I just said it's not like the floodplain has changed in the last month, at least not perceptively. Well, FEMA has said they're looking to balance out some iniquities in how the premiums were spread out among the insured. More importantly, though, they're kind of bankrupt, so they've been insolvent, and I think this is mostly a play to try to keep the program solvent, so everybody has to pay. Now, what they typically do is they typically look at the flood zone that the house is located in. They'll look at base elevation and the type of property. Now they're going to be looking actually at the flood claim history going back 20 years. So if you're in an area that flooded during Sandy, we already know what they're going to find: the replacement cost of the home, the elevation of the first floor, and the distance to a flood source. Not exactly sure what that means, and some of the insurance experts I've talked to are not exactly sure what that's going to mean either. But what's the point? Well, point number one, if you own a home in a flood zone, or if you're not sure, reach out to your insurance provider. If you have a flood insurance provider, that's who you're talking to. Otherwise, you could talk to really whoever does your homeowner's insurance, and if they don't cover it, they'll probably have a source. Happy to refer some people also if anyone wants to reach out. But some things to keep in mind. Homeowners that currently have their flood insurance policies in place won't see any increases until the spring, even though this has been implemented. So for those who have existing policies, you have that extra lead time, and there's an 18% per year cap on how much it can get raised. So it may take a few years to get phased in. We're talking about some pretty big increases, though. Flood Zone X, we're talking about potentially 3 times the premium going into effect this spring. So definitely get ahead of this and understand what you're going to be paying if you're an owner. And if you're a buyer, well, I'm telling you now, this may change the calculus a bit. If you are a buyer, though, in a lot of cases, you can assume the existing policy. So if you're thinking, oh, it's not fair, the owner has an advantage over the people who are in the market who haven't purchased a house yet, well, you oftentimes can take over that policy, and that's going to help some people, especially if this is getting phased in over a certain period of time. Speaking of time, I'm going to really try to keep these under 5 minutes, and I think I'm just looking at my notes quickly. I think I've said all that I want to say. There's not too much more that we can say about it. I guess one other thing to note is that it's not going to go up for everyone, And it's just because your neighbors went up or down doesn't mean that yours is going to do the same. It very much depends on where you fall on FEMA's flood zone map, what your elevation is. It looks like, just from reading like Long Island Business News, Newsday had a story on this, about 78% of existing policies will probably get an increase. So that's only 22% that will see a decrease. So this is definitely something to pay attention to. It's likely going to make it more expensive to live in these flood zones on Long Island. So that's it. Happy to point people in the right direction. I'll be studying up on this in the coming weeks and months so that I can better advise our clients. And we'll be talking to you real soon. Thanksgiving's right around the corner. I hope everybody's going to have a great rest of the week, and we'll talk to you soon.